Something very strange is happening in the silver market right now, and almost nobody is talking about it. Prices look calm on the surface, charts look boring, headlines feel quiet. But underneath, February is shaping up to be one of the most important months for silver in years. There is a very specific price level that, once crossed, could completely change how silver trades for the rest of this year. Most investors are not ready for it. Most traders are positioned the wrong way. And if history is any guide, the people who wait for confirmation will already be too late. What you're about to hear is not hype, it's a pattern. A pattern that has repeated again and again right before silver shocks the market. Before we go any further, if you follow silver, gold, or real macro moves that the mainstream ignores, make sure you hit like and subscribe right now. This is Metal Mindset, and on this channel we don't chase noise. We track pressure points. Subscribing early matters because when silver moves, it doesn't give polite warnings. It explodes, and by the time headlines catch up, the opportunity is gone. Now let's talk about why February matters so much. Markets don't move randomly, they move when pressure builds for months and then releases at very specific moments. February has always been one of those moments for silver. Liquidity shifts, positioning resets, options expire, and institutional books rebalance. This is when quiet markets turn violent. And what makes this February different is that silver is entering it already stretched, already compressed, already manipulated into a tight range that cannot hold much longer. Right now, silver looks boring. That's intentional. When silver is boring, it's usually being loaded. Big money never buys during excitement, it buys during boredom, frustration, and disbelief. Retail gives up, volume dries up, and price stops responding to good news. That's not weakness, that's absorption. And February is historically when absorption turns into expansion. There is a psychological trap happening right now. Investors see silver failing to break higher and assume it's dead money. They see stocks moving, crypto making noise, and silver just sitting there, so they walk away. That's exactly how people were positioned before silver's biggest moves in the past. Silence is not safety, silence is tension. Now let's talk about the price level that changes everything. Silver doesn't need to go to crazy highs to trigger chaos. It just needs to reclaim a zone that most traders have written off. Once silver holds above that level with volume, short sellers start panicking, hedges start breaking, and momentum funds are forced to chase. This is where silver stops trading like a metal and starts trading like a threat. The reason most investors are unprepared is simple. They are trained to react, not anticipate. They wait for confirmation from headlines, analysts, and price targets. But silver never moves when it's obvious. It moves when disbelief is highest. And right now, disbelief is everywhere. Let's zoom out for a second. Silver is not just an investment asset. It's a monetary metal, an industrial metal, and a geopolitical metal all at once. That makes it dangerous in unstable environments. When inflation expectations shift, when rates wobble, when currencies weaken, silver reacts faster than gold. And right now, every one of those pressures is building quietly. Central banks are stuck. Inflation isn't gone, but growth is fragile. Rate cuts are being talked about, but nobody wants to admit the damage already done. Debt levels are exploding, confidence is thinning, and the system is pretending everything is fine. Silver thrives in this kind of denial phase. At the same time, industrial demand for silver keeps rising. Green energy, solar panels, electric vehicles, military tech. None of that is slowing down. Silver is consumed, not just stored. That's a problem when supply is tight and investment demand wakes up at the same time. You don't need a shortage to create a spike. You just need demand to arrive faster than supply can respond. And here's where February becomes critical. This is when institutional positioning resets. This is when paper silver markets face stress. This is when delivery pressure quietly increases. And this is when price suppression becomes much harder to maintain. Most investors don't understand how silver is controlled. It's not controlled by fundamentals alone. It's controlled by confidence. As long as people believe silver won't move, it stays capped. The moment that belief breaks, the control mechanism weakens. February has a habit of breaking beliefs. Think back to previous silver shocks. They didn't start with news. They started with price doing something it wasn't supposed to do. A daily close above resistance, a weekly hold, a breakout that didn't immediately fail. That's all it takes. Then suddenly, the narrative changes overnight. And when that happens, the same people who ignored silver start rushing back in. That's where volatility explodes. That's where silver moves dollars in days, not cents. That's where unprepared investors make emotional decisions at the worst possible time. What makes this setup even more dangerous is positioning. Too many traders are leaning the same way. Too many are comfortable shorting rallies. Too many believe silver is capped forever. Markets punish comfort, especially in February. Another thing nobody is paying attention to is the gold-silver relationship. Gold has already made its move. Silver is lagging, but it never lags forever. When silver catches up, it doesn't do it slowly. It overreacts. That's how the ratio compresses. That's how silver shocks people who thought they had more time. On Metal Mindset, we talk a lot about timing versus price. People obsess over targets. They want to know if silver is going to 30, 40 or higher. But the real edge is knowing when a move is likely to start, not where it ends. February is about timing, not fantasy numbers. Right now, silver is sitting at a decision point. Above it, the market changes character. Below it, complacency continues a little longer. But the longer silver stays compressed, the more violent the release. That's physics, not opinion. Let's talk about psychology for a moment. Most people miss silver moves because they feel uncomfortable buying something that hasn't moved yet. They want momentum first, but by the time momentum appears, risk is already higher. Smart money buys tension. Dumb money buys excitement. And tension is exactly what February is delivering. Look at sentiment. Look at how few people are talking about silver compared to other assets. Look at how quiet it is on social media. That's not bearish, that's bullish fuel. Silver never tops when nobody cares. It tops when everyone is screaming about it. Another reason investors are unprepared is because they think silver will give them time. It won't. Silver moves fast because its market is small. It doesn't need massive capital inflows to move price. It just needs marginal demand to flip direction. And February is when marginal demand shows up unexpectedly. There's also a seasonal element. Earlier portfolio rebalancing, inflation data resets, policy expectations shift. All of this hits silver at once. It's like multiple waves stacking on top of each other. Alone, each wave is manageable. Together, they create a surge. And let's not ignore geopolitics. Uncertainty doesn't need to explode to affect silver. It just needs to linger. Ongoing conflicts, trade tensions, supply chain risks, all of these quietly support precious metals while headlines focus elsewhere. Silver absorbs that risk silently, until it doesn't. Here's the uncomfortable truth. By the time silver feels safe, it will already be expensive. By the time everyone agrees it's bullish, the easy money will be gone. That's why most investors stay unprepared. They are waiting for permission. This February isn't about predicting the future. It's about recognizing pressure. Pressure in positioning. Pressure in sentiment. Pressure in supply and demand. Pressure in confidence. Markets don't relieve pressure gently. On Metal Mindset, we don't promise instant riches. We focus on asymmetry, limited downside, explosive upside. Silver in February offers exactly that kind of setup. Not because of hype, but because of structure. If you're watching this and thinking, I'll wait and see, understand that waiting is also a position, and it's usually the one markets punish the most. As we move deeper into February, watch how silver reacts to pullbacks. Watch whether dips get bought faster. Watch how price behaves near key levels. The market will tell you everything if you're paying attention, and when silver finally moves, the narrative will flip instantly. The same analysts who ignored it will suddenly explain why it was obvious. The same investors who hesitated will chase. That's how every silver shock looks in hindsight. The goal isn't to be loud. The goal is to be early. If this video helped you see the silver market differently, make sure you stay with Metal Mindset. Share this with someone who still thinks silver is boring. And when this move plays out, come back and read the comments. That's where the real conversation happens. Before you go, drop a comment below. Do you think February is the turning point for silver, or do you think the market can keep suppressing it longer? I read the comments, and your perspective helps shape future videos. And one last thing, if you know someone who's completely unprepared for a silver shock, send them this video. Sometimes one conversation is all it takes to change how someone sees the market. This is Metal Mindset. Stay sharp, stay patient, and don't ignore quiet markets. That's where the biggest moves are born.